If you have been wondering how you can invest in global markets and maybe access to global shares in global companies like Apple, Tesla, Nvidia, and Amazon, then this video is for you. In this video, I'm going to be helping you understand how you can invest in global markets and access these kind of opportunities. So you're going to be looking at why invest in global markets, how you can invest in global markets, what brokers are accessible for Kenyans to access global markets. Then I'm going to be giving you some tips that can guide you in your investing journey. So do stick with me until the end because I'm going to be sharing some important tips that can help you in your investing journey, most when investing in global stocks. Then if you like financial literacy videos and you'd like to improve your financial literacy and learn more about financial markets, do consider or maybe do subscribe to my YouTube channel, as I'm going to be releasing more videos that can help you improve your financial literacy and make more better investment decisions. So let's get right into it. There are some key definitions, maybe some key things that I feel are important for us to understand that can guide us make this explanation or maybe this discussion even more simpler. So the first thing that you must understand is what an index is. So an index is simply a tracker that is used to track the performance of a certain sector of the stock market or maybe of any financial asset. So maybe some of the basic indices that we have in our Kenyan market, we have something like the Nairobi All Share Index that tracks the performance of the entire stock market or the entire Kenyan stock market. So that's an example of an index. Maybe a better way to think of an index is just something that tracks the performance of a group of assets. The same way in a group of students, we have the mean performance of the class. So we have best performing students, but if you want to understand how the class is performing, then you go with the average. So that's the same thing with indices. So indices will be an index. It helps you to understand how a basic, maybe how an asset class is performing. So if let's say the Kenyan stock market, if you want to understand how the Kenyan stock market has been performing on average, you can look at the Nairobi All Share Index that can give you a feeling or maybe an understanding of how the Nairobi Securities Exchange has been performing. So in global markets, we have two main indices or maybe three main indices that investors look when trying to compare how the global markets have been performing. And these are very important for any investor investing in global markets to understand, because this will be guiding you or maybe you'll come across them a lot of times. So the first index is what we call the S&P 500. So the S&P 500 is an index that tracks the performance of the top 500 US companies listed in the US stock exchange. So why is it important? So mostly it is used as the benchmark asset or maybe as the benchmark to evaluate returns of other fund managers or maybe of other assets, because it is assumed that maybe the average investor in the global market, maybe in the US stock market, is investing in the S&P 500. So any fund manager or maybe any investor is trying to evaluate themselves, the individual performance with the performance of the S&P 500. Then after that, you also have other main indices like the Nasdaq 100. So the Nasdaq 100, it tracks the top 100 financial companies listed in the Nasdaq exchange. There is also another index called the Dow Jones Industrial Average, which is one of the most, maybe the oldest index in the global market. So it's very good to understand what indices are, because that's where we begin our discussion about index funds and ETFs as well. So yes, indices are just trackers, but now remember, you can't invest in an index. So for you to invest in an index, there must be a company, let's say an investment company or maybe an investment bank, that tries to create a portfolio that mirrors the performance of that index. So that's why now ETFs and index funds comes in, because now you can't invest in an index because an index is just a tracker that evaluates the performance of a certain sector of the stock market. So that's where index funds and ETFs comes in. So basically what ETFs are is just an investment company, maybe an investment bank, coming together and trying to create a portfolio that mirrors the assets under that index. So let's say the S&P 500, it's a market cap weighted index. So a company may come in and try to create a portfolio that mirrors the underlying assets of that index. So that's where ETFs and index funds comes in. So the difference between ETFs and index funds is not that huge. The ETFs and index funds can be used interchangeably, and they actually have more similarities than differences. So the only difference, maybe the only time you may prefer an ETF to an index fund, is if you're a day trader. But now for us Kenyans, maybe investors outside the US markets, most of us don't have access to index funds. What we have access to is what we call ETFs. So the only difference between ETFs and index funds is that ETFs can be traded on a regular basis, so maybe during the open market hours, just like stocks are traded. But now for index funds, they have an opening price and a closing price, so it can only be traded at one price during the trading hours. So if you're a long-term investor, it doesn't really matter much whether you're picking an index fund or an ETF. So for us investors outside the US, mostly what we have access to is ETFs. We have identified the index like the S&P 500, but now remember, you cannot invest in that index. You must now identify an ETF that tracks, maybe that tries to mirror the performance of that index so that you can invest in it. So we have fund firms that now create portfolios or that create these ETFs that now track the performance of that ETF. So there are many fund firms that offer these ETFs. So a good example is Vanguard, which is probably maybe one of the main fund firms that offer these ETFs. So its ETF, it's called VO, VOO. So VOO is what we call a ticker symbol. So a ticker symbol in stock market is a 3 or maybe maybe 4-letter symbol that has the prefix of a dollar sign that is used to represent maybe a stock, an index, or an ETF. So the ticker symbol for the Vanguard ETF, S&P 500 ETF by Vanguard, is VOO. So whenever you see a dollar sign and then 3 or 4 letters in your social media, maybe when people are discussing global markets, that's just a ticker symbol that represents maybe a stock or an index. I've mentioned ETF providers that track the performance of the S&P 500. We have VOO by Vanguard. We have other providers like SPDR. We have BlackRock, which has iShares. We have SPY, and we have other main fund providers, maybe as you can see from this list of funds that offer ETFs that track the performance of the S&P 500. So you have to understand what an index is, what an index fund is, what an ETF is, so that you can understand investing in global markets per se. Because when investing in global markets, you have two types of investments. We have active investments and passive investments. So active investments, where you're investing in individual stocks. Let's say you're deciding whether to pick Apple, Tesla, Nvidia, and those are the individual stocks. So you have to be a very active trader or active investor because you must analyze those stocks. But now for most people, or for the average person, the most recommended thing is for you to invest in ETFs. So you must invest passively because you don't need to follow markets closely, because you can easily build your holding or maybe your portfolio size in an ETF over time. Because as you can see, the stock market always goes up. If you can look at the performance of the S&P 500 maybe from the 1900s up to today, you can see that it has averaged a return of, let's say, 10.5% per annum. And then you can see the stock market, as you can see the trend on the chart here, it is always going up. So after you understand those two, maybe those basic definitions of global markets, you understand what an index is, what an index fund is, what an ETF is, then you are ready to go to start now our discussion about investing in global markets. Those are very important. So always look at those indices, the S&P 500, the Nasdaq 100. There are also other major indices depending on the global market that you're looking at. So in the US stock market, we have the Dow Jones Industrial Average as well. In other markets, like maybe the Japanese stock market, you have the Nikkei 225. In Germany, you have the DAX or the DAX. And even in Europe, we have the FTSE 100. And in other global markets, have these indices that track the performance of the average stock market investor, maybe the average stock performance of that market. Why is it important to invest in global markets, or what opportunities exist for us as maybe Kenyans or maybe residents of other parts of the world to invest in global markets? So number one is what we call better returns, because if you look at the US stock market, even Warren Buffett credits most of his success, or maybe most of his investing success, to the American economy, what he calls the tailwind of the American economy, as you can see the quote that I've attached here. The US stock market, if you can look at the basic indices like the S&P 500, the Nasdaq 100, they have averaged very good returns over the long term. So for example, if you look at the performance of the S&P 500 since 1900s, but maybe I'm going to give my evaluations from 1957 because that's what I have. The S&P 500 has averaged a return of 10.5% since 1957 per annum, and that's a USD return. And for those maybe who don't know, a USD return of 10.5% is very different from a return of 10.5% in Kenyan shillings because of what we call adjusting for currency differences. Because if you look at the exchange rate of the USD to the Kenyan shilling 10 years ago, maybe in 1957, and the exchange rate currently, you can see that rate is not the same. So you have to adjust for those exchange rate differences. So maybe a 10% return on the USD, it's much more superior than a 10% return on the Kenyan shilling, depending on how those two the currencies perform over time. So number one, good returns, or what we call better average returns on the stock market. So if you compare maybe the performance of the US stock market based on maybe the S&P 500, maybe an index that tracks the performance of the entire stock market, you're going to see that maybe the US stock market is always going up. But then if you look to a local stock market, the NSE, you can see we have cycles of up and down, majorly trying to copy what our 4-5-year electioneering cycle. So as we have said, or maybe as you have seen, the global markets, maybe the US stock market in particular, has averaged very good returns, because as you can see, the S&P 500 has averaged a return of 10.5% since 1957 to 2023, and then the Nasdaq 100 has averaged a return of about 15% since 1957 to 2023. And actually, if you look at last year, the S&P 500 had a return of 23%, and then the Nasdaq 100 has a return of 54%. So then this year to date, both of them are actually around 20%. The S&P 500 is higher than the Nasdaq as I'm recording this. So year to date, maybe from the beginning of this year, they have given us a return of around 20%. So that average return, historical return, maybe from 1900s, maybe from 1957, you can see that maybe the global markets have been performing very well. Maybe the US stock market in particular has been performing very well compared to maybe other markets. And even Warren Buffett is famously quoted to say that you can never bet against America.
And never bet against America.
So maybe you can ride on that. So the two main reasons is access to better markets, and then maybe the good returns, maybe the moderate returns of the S&P 500 and the Nasdaq 100, because there are people who may argue that maybe the 10% and the 15% of the S&P 500 and the Nasdaq 100 may may be low for them, but for me, I feel they are very good returns on average for the average investor who doesn't want to spend a lot of time analyzing companies. So you can just find ETFs that track those indices and then just invest in them, as we are going to be discussing throughout our video. Then number 3, the other main important reason why invest in global markets is that you get to hold your assets in a superior currency, what you call the USD, because it's the global reserve currency, and maybe it's the main currency used globally for trade facilitations. So if you look at the exchange rate of the USD versus the Kenyan shilling 10 years ago, that's around 2014, the USD was exchanging at a rate of, let's say, 85, 86 shillings, as you can see from my chart here, but currently we are at 130 shillings. So if you look at last year, the Kenyan shilling had a very sharp depreciation, accounting for around 26% in 2023, but this year in 2024, so far as I'm recording this, it has tried to bounce back, appreciating by a rate of 21%. So but over the long run, we have always maybe seen the Kenyan shilling losing the USD at a rate of around 2 to 4% per annum. So I'm not sure whether this one is going to continue, but as we all know that maybe the American economy is much stronger than our Kenyan economy, and the dollar is still the global reserve currency. So I believe maybe our Kenyan shilling will still continue depreciating against the USD. So if 10 years ago, one USD was exchanging for 86 shillings, and today it's exchanging for 130 shillings. So if you had invested in the S&P 500 or the Nasdaq 100, you not only got the 10% return per annum on average, you also got the currency appreciation, because now you get more shillings for every dollar that you own, or maybe that you hold in terms of that asset. Because now when you're buying these assets, you hold them in USD, because now you can't access global markets with your Kenyan shillings. You have now to buy them in USD and hold your assets in USD. So the third reason is hedging against currency risk, or maybe your home country risk, because we know that maybe recently we had some protests, the mandamanos by Gen Zs. So in case you want to hedge your portfolio, maybe your wealth or your investments against such home risk, you can always now invest in global markets. So just to clarify, why invest in global markets? 4 main reasons. Number 1 is access to better global markets. Number 2, I think the US stock market has averagely returned better returns compared to maybe other stock markets, as you can see the comparison of other indices or maybe major stock exchanges in the world here. Then number 3, like I said, you can always hedge your portfolio against currency risk. So based on those maybe 3-4 factors, the fourth one being that you have access to ETFs that are passive, that can help you invest in offshore markets passively without having to actively maybe learn how to read financial statements, learn how to evaluate companies or how to evaluate businesses. You can still tap into those passive factors and still get moderate or maybe good, quite decent returns. And now to the biggest question you may be having: how do you actually access these global markets? So for you to access these global markets, you must maybe use a stockbroker or an investing partner that can help you access these global markets. Like we all know, even in the Kenyan stock market, you need a stockbroker who helps you to access the publicly traded companies that are issued in the Nairobi Securities Exchange. So in a similar manner, even for global markets, you need a stockbroker or maybe an investment partner that can help you access these global markets. So I'm going to be giving you a list of brokers that maybe you can do your own due diligence and look at how they compare against each other, but I'm also going to be giving you some insights on how I think about these brokers. So one of the best brokers, it's what we call Interactive Brokers. So Interactive Brokers is a publicly listed company listed in the New York Securities Exchange. So it has been in existence for about 77 years. So it's arguably one of the best stock brokers that can help you access global markets, more so if you are outside the US, maybe you're not a US citizen, not a US resident. So one of the best ways that you can access global markets. So Interactive Broker has its advantages, mainly because it has very low trading fees and commissions, in that they charge 0.35% per trade to 1%. So the list is 0.35% and the max that you can pay per trade commission is 1% of your trade value. So I like Interactive Brokers because of the low trade commissions. But then it has its challenges because you can't fund your account the normal way. So you can't use M-Pesa, you can't use card payments. You have either to do a Swift transfer, which can be expensive for some banks, and then also maybe use your Wise account that they recently added. So that's Interactive Brokers for you. So the other stockbroker that can help you access global markets is HISA. So HISA is a Kenyan company or a Kenyan startup that was recently acquired by, I think it's a Nigerian company called Rise. So HISA allows you to invest in global markets as a Kenyan investor. So it gives you access to both stocks and ETFs. It can help you access these global markets from as low as $1. So the good thing with HISA is that, having your investor profile approved is quite easy because it was essentially a Kenyan company. So you're uploading your details. It's quite easy, unlike for Interactive Brokers, because for Interactive Brokers, maybe to get your account approved, it takes quite some time. Maybe it's more complex than what HISA has. So HISA is there. So they also charge very low fees, 1% per trade commission for investing in offshore stocks. Then it also gives you access to local stocks as well as maybe other investment opportunities that maybe they are bringing up in the near future. So that's easier for you. Then number 3 is what we call Ndovu Wealth. So Ndovu is also a Kenyan company that gives you access to global markets. So Ndovu as well has access to maybe some select ETFs. So they don't have access to the entire global markets, but they have access to some select ETFs, as you can see here. But then maybe one thing that maybe usually stands out for people with Ndovu is that maybe their fees, some people say that maybe they're high, but you can look at their fee structure and see if what they also offer makes sense to you. Then you can also compare with the other companies. So other companies that maybe may be accessible to you depending on location. One good example is eToro. So eToro was accessible in the Kenyan market maybe for Kenyan citizens a few years ago, but for now eToro stopped accepting new Kenyan investors. I think maybe it's because of a high case of corruption, maybe anti-money laundering, and maybe because financial companies are usually very careful with such cases because they don't want to maybe have their licenses revoked. So eToro is no longer accepting new citizens, but now depending on your geographical location, you can see if you have access to eToro. Then other brokers that you may hear people mention, we have Scope Markets and HF Markets. So myself, I've never tried those brokers, but maybe you can try them and see how it will work for you, or if there's anyone who has tried them, you can give us a review in the comment section. Those are the brokers that you have access to. So maybe just to mention this, I have a course maybe on my website that I'm going to be linking in the description below that gives you access to maybe a better understanding of global markets. I have a course that takes you step-by-step guide on how you can access global markets. I go much deeper into discussing these brokers and even recommending the best broker for you. That's it on investing in global markets. So I hope this video has been an eye-opener for you. So maybe my final thoughts about this, just to get maybe just drive home some clarity. So number one is that if you look at the tax policy for offshore markets, is that you'll see that dividend income is taxed at 30%. So your dividend income is taxed at 30% for non-US residents. Yes, there are some tricks. Maybe there are some ways that you can invest. Maybe invest in ETFs domiciled in other countries like Ireland that can maybe reduce your tax obligations. But on average, the dividend income is taxed at 30%. But now remember, our main goal as maybe foreigners investing in global markets, we don't want to invest for the dividend income, because if you look at the dividend yields for global markets, they are quite low compared to our Kenyan markets. So if you are looking for dividends, I always recommend that maybe you stick to the dividend kings of the Kenyan stock market. But now for our main goal of investing in offshore markets is the capital appreciation, because if you can see the performance of those ETFs, even before you look at individual stocks, the performance has been quite good. And now considering that you're not delving deeper into the complexities of the stock market, you're not analyzing stocks, you're not evaluating companies, you have your work cut short for you. So that's why I recommend passive investing, maybe investing in ETFs, because even Warren Buffett himself says that the best way for the average person to invest in the stock market is by investing in low cost index funds. Now, since us we don't have access to index fund, our equivalent of an index fund is what we call ETF, because they're almost the same like I explained. So like I mentioned, I go deeper into explaining maybe how you can access global markets, guide you on some strategies, guide you on maybe should you now consider picking individual stocks, maybe ETFs, should you stick to ETFs, how has the comparison been between individual stock pickers and maybe ETFs, how have mutual funds performed compared to the benchmarks, to the benchmark indices. So you can check the course on my description. Then if you are interested in investing in global markets, it guides you through. And then you can also join our community whereby we discuss as Kenyan investors, maybe as investors outside the US, how we think about global markets. We share ideas and even investing ideas and discuss more on investing in global markets. So that's it for me. Remember to subscribe if you want more videos like this, if you're interested in more content around financial literacy and improving your financial decisions. Let me know what you think about the brokers, maybe investing in global markets. What have you tried? How has been your experience so far? And maybe if you have any tips for us, maybe for other people in the comment section, let us see what you think about investing in global markets. So that's it for me. See you next time in the next video. Bye bye.